Good morning. You're watching Business World Live here on One News. I'm Jess De Los Santos, and here are the biggest stories to kickstart this trading day, Wednesday. Two foreign institutions expect the domestic economy to grow faster than previously estimated this year, despite risks from the pandemic and Russia's invasion of Ukraine. With the Omicron-driven surge dampening investor sentiment, foreign direct investments fall for the first time in nearly 3 quarters in January. The government raises more than $500 million in a samurai bond offering. And another company debuts on the local bourse just a day before financial markets go on a Holy Week break. We begin our broadcast with two multilateral institutions upgrading their growth forecast for the Philippines despite risks posed by the Russia-Ukraine war, as well as a possible surge in COVID-19 infections. The ASEAN Plus 3 Macroeconomic Research Officer, AMRO, expects domestic GDP to expand by 6.5% this year. That's higher than the 6.2% forecast it penciled back in January. On the other hand, the United Nations Economic and Social Commission for Asia and the Pacific, or UNESCAP, projects a GDP growth of 6.3%, higher than its previous estimate of 6%. AMRO cites recovery in private spending as one of the key factors for its upgrade. However, AMRO noted that the biggest threat to recovery is a possible resurgence in COVID-19 infections. Health experts have recently warned of a surge after the May polls, saying many vaccinated Filipinos have yet to receive their booster shots. AMRO said the Russia-Ukraine war also poses a risk to growth outlook. UNESCAP shares the same view, saying the Philippines has not completely recovered from the pandemic when the Russia-Ukraine war began in February. Foreign direct investments declined for the first time in 8 months in January. The BSP reports that FDI net inflows dropped by 16% to $819 million last January. That's from over $970 million recorded in the same period in 2021. This marks the first annual decline in FDI inflows since the 20.3% fall to $452 million in May last year. The BSP attributes the drop to the Omicron-driven surge in the first month of the year, which prompted tighter restrictions and dampened investor sentiment. The Trade Department is urging MSME exporters to take advantage of the Philippines' preferential trade arrangements. That's in order to cater to more markets and further contribute to job creation. The agency is also pushing the government to further empower MSMEs and to talk up the advantages of such preferential arrangements. Trade Assistant Secretary Alan Gepti says the RCEP was particularly crucial for MSMEs to tap because of its improved trade facilitation mechanisms for member economies. Although the Philippines has yet to sign on to RCEP after the Senate was unable to give its concurrence before it took a break last February 3 for the May elections. Now, speaking of MSMEs, a tech platform which helps small businesses go digital has just raised $77.5 million in its latest funding round. To talk more about this and how they plan to use that amount for expansion, we have on the show Raymond E.R. Roland, CEO and co-founder of Grocery. Good morning, E.R. Thank you for joining us today.
Hey, good morning, Jester. Thanks for having us.
Okay, first, before we talk about that latest funding round that you just had, give us an idea first, especially for the uninitiated. What exactly is Grocery and what pain point were you trying to address when you came up with the app?
That's a good question. So Grocery is essentially a B2B platform, which means we primarily serve businesses. In this case, micro and small businesses. And largely size stores in the Philippines. There are about 1 million of them. And really the problem is, as an aggregate, they're so big, but individually they're very, very small. And because they're so small, they don't get to negotiate on good prices, they don't get access to suppliers, and they often have to go, commute and carry heavy products just to kind of replenish their inventory. our platform is there to give them a digital solution. So with just a click and an app, they can buy products at really, really good prices. We deliver to them for free with no minimum order quantity. And they kind of get to enjoy that at the comfort of their store.
Okay, so it's really just about making processes, systems more efficient for small businesses by helping them ride the digital wave. Now, of course, in your latest funding round, 75.5 million US dollars raised. Where are you expecting that level of confidence here from investors, and what are the plans here? I mean, where exactly will you be using the proceeds?
I think the investors are seeing that we've built a model that can scale. It's also a good thing that they're giving a lot of confidence on our sari-sari store network in the Philippines, that their resilient business model is going to be relevant for decades to come. And this investment is really going to help us accelerate our presence throughout the entire country. We've started our foray into that with the opening of our warehouse in Iloilo a few weeks ago. And over the next couple of weeks, that's just going to continue. And of course, as we kind of bring this ecosystem and this platform to the stores, we also want to invest in bringing them more services, more negocios like bills payment, remittances, telco, and anything else that you can think about doing in a sari-sari store that will help us accelerate that as well.
So again, I take it to mean, of course, majority of your presence still is in Luzon. But what's in the pipeline here for Visayas and Mindanao? What exactly are your targets for the southern regions here? Again, Visayas and Mindanao.
At the moment, we have roughly about 50,000 active stores. And you're right, the Jester, that's predominantly in Luzon. We hope that by the end of the year, we'll be closer to 150, maybe even 200,000 stores nationwide. Every major province that you can think of, Cebu, Davao, CDO, Bacolod, expect that we have some plans to establish presence there within the year.
Okay. Give us an idea of your current client base here. Ano ba to? Majority are your small sari-sari stores. And what's the plan here? Do you plan to expand that to include, let's say, pharmacies or other types of small businesses?
No, that's exactly right. No, I think it's really the small stores because they're at the nucleus of their community. Little do people know that over 80% of Filipinos are still within maybe a block or two away from every sari-sari store. So if you really want to reach every Filipino, sari-sari store is the best avenue to do that. So you're right, 95, 97% of our network is among these kind of small tinderos and tindera. As we build saturation in terms of our logistics in these types of stores, we're realizing that we also have a right to win in other small store formats like bake shops, small pharmacies, carinderias. We're able to bring the efficiency of our supply chain to also solve their pain points. So expect that in the future, we want to expand our platform to all types of MSMEs and not just sari-sari stores.
Okay, now again, like what we mentioned earlier, I mean, we were talking about this before the start of the broadcast. The past 2 years have not been the best years here for MSMEs. I mean, a number of them, of course, shutting down due to the pandemic. Has that in any way affected your number of clients and essentially your top line?
I think what the pandemic has done, of course, the pandemic is unfortunate for many, many reasons. But what it has allowed, on a slightly positive note, is to really, reap the benefits of digitization. So before, a lot of these sari-sari store owners who are kind of not as averse to technology and would prefer to deal with a salesman was forced to really accelerate their adoption of using an app. And that has really helped the platform grow. For us, we think it's good for them because it really takes out any kind of face-to-face friction, and they can really enjoy the benefits of the full benefit of the platform. So the pandemic has kind of helped us accelerate our growth from that standpoint. But sari-sari stores have been quite resilient. I think the fact that these stores don't pay any rent, they don't pay any employees, the volatility of their sales, that doesn't really preclude them to close their stores because they don't really have a lot of operating costs to recover. I think what Grocery has done was to create a platform where they could leverage on that resilient business model and really leapfrog the growth potential of their store, taking the benefits of digital in place.
Okay. Do I take it to mean, ER, that you still managed to experience growth in 2021, and what level of growth are we talking about here?
Absolutely. I think for 2021, we almost tripled our transaction value. We grew, more than doubled our store footprint. And the stores that have been with us, we've seen their basket sizes grow 20, 30% over the same period. So we are seeing that the sari-sari store channel is growing. And I think some of the other studies by other independent researchers are supporting that as well, that the pandemic has really given a very clear role for sari-sari stores to play within their communities.
Okay, given that, what's the target now for 2022? Are you also looking at raising more funds?
I think for 2022, we're just focused on executing right now. We've been blessed enough to have confidence from our investors to fund our strategy. So our heads are down. We need to make sure that we deliver on our commitment to our customers and our commitment to be everywhere in the Philippines.
Now, this is looking further ahead, ER. Are there plans for Grocery to go public, or if not as well, are you planning to expand outside the Philippines and enter other markets, particularly in Southeast Asia?
I think, we're not closing our doors on anything, probably quite an early stage for us to think about it at this stage. However, we do recognize that a business like Grocery requires immense local knowledge. Whatever we've learned here in the Philippines, it's not necessarily as applicable in other markets. I mean, in the Philippines alone, because you have 7,100 islands, how we do things in Luzon are also very different with how we do things in Visayas and Mindanao. So I expect that difference to grow if we go to other markets. So while we are continuously studying the potential of other Southeast Asian markets in particular, we do think that the MC strategy might require some partnership, or someone that would show us the way to how to understand MSMEs in some other local markets as well.
All right, again, thank you very much for your time this morning. Hoping, of course, for greater things ahead for Grocery. Again, we have ER Roland, CEO and co-founder of Grocery. Thank you, ER.
Thanks, Lester. Take care.
Now, coming right up after the break, CTS Global debuts on the local bourse. We'll check how the stock is performing when Business World Live returns. Stay with us. Pinull screen ni And you're still watching Business World Live here on One News. I'm Jess De Los Santos. Time now to do a quick check on the local bourse, which extended losses on Tuesday, down 1 3/10%, sinking further below the 6,900 level. But as you can see here, a bit of a relief here for our investors. You have the index up close to 0.4%, now at 6,923. This pretty much, of course, is in line with gains that we're seeing across Asia here and U.S. equity futures. This as investors weigh in on inflation risk coming from the U.S. Again, inflation print in the U.S. coming in at 8.5%. That is its highest print yet in 4 decades. But some glimmer of hope as the core gauge showed some moderation. But investors, again, still looking at risk in Ukraine. This as Ukraine maintains that Russia could actually resort to chemical weapons use. Luis Limlingan of Regina Capital said on Tuesday that further escalation of tensions as well as stringent lockdowns in China have led to a broad sell-off across the markets. Again, the local bourse, however, as you can see right here, seems to be starting the last trading day of the week on a good note, up 0.4% to 6,923. Let's try to check in on how some of our individual stocks are performing today here. A lot of blue chips here starting the day with gains here, particularly Jollibee, as you can see, up 1 6/8%, followed by URC, as well as other Gokongwei stocks like JG Summit, both stocks gaining at least 1 4/10%. However, on the downside here, you can see another Gokongwei stock here, Robinson Land, starting the day in the negative territory, down 0.7%. San Miguel Corporation, likewise, so far, the day's worst performer, down by 0.75%. But let's zoom in on our coal miners here. Why? Because we are expecting heavy movement here in our miners. This as after European coal futures rose to its highest in a month as import limits from Russia is expected to tighten the market. That moratorium is part of moves to cut revenue source for Moscow, but that should also leave the market looking for more sources of fuel from other countries where coal is still part of the power mix. That, of course, includes the Philippines. Looking at how Semirara is performing so far today, however, the stock is down close to 0.5% to 30 pesos and 60 centavos a piece, bucking, of course, the gains that we're seeing across the local bourse. Coal Asia, likewise, as you can see right here, trading at 25 centavos a share. And lastly, a glance at the newest entrant on the bourse, CTS Global Equity, the stockbroker, formerly Citi Securities, debuts on the exchange ahead again of that Holy Week break. It pre-opened earlier at 1 peso and 10 centavos a share, up a touch from its IPO price of 1 peso. The company looks to raise 1.37 billion pesos from 1.37 billion shares to invest in U.S. and Asian equities. Again, CTS earns revenue from trading gains via its pool of 40 traders. As you can see right here, CTS now up by as much as 6%, trading at 1 peso and 6 centavos a piece on its debut day. On to some global news. An extended lockdown of Shanghai's 25 million people failed to contain China's largest COVID-19 outbreak in 2 years. Even the wealthy are struggling to buy food as the lockdown drags on. Let's get the details from Bloomberg.
I'm here in Shanghai on day 11 of my lockdown, and we're getting anecdotal reports that the food situation here has been improving after recent protests. So right now, there are two main ways to get food. One is through the government, and the second way is actually more important. It's more self-help, and it's group buying. And basically, I added myself to some neighborhood WeChat groups that are buying food, and someone will say, hey, I can get access to 100 cartons of milk, but we need enough people to buy 100 cartons. So I might say, I'll buy 2 or 3, and then I'll pay him the money, and he'll sort it out. Group buying puts some people at a disadvantage, especially the elderly who are less technologically savvy. Not only do they need to own a smartphone, but they need to know how to use the WeChat app and then be able to skim through hundreds of messages quickly in order to beat out their neighbors in buying food. For myself, one of my friends was able to contact a meat wholesaler and get a huge shipment delivered to all his friends, including myself. So I want to show you my fridge. Last week, I tell you, I was like eating expired bread, expired milk, and the odd carrot, and now have a look inside. Fridge is jam-packed with veggies, carrots. I've got a lot of frozen meat, chicken wings and ham. Got some bacon. So this stuff can last me for a few weeks, so I'm really thankful. The government has been taking steps to improve some of the logistical bottlenecks that are preventing food and supplies from getting to the city. The State Council has ordered a nationwide logistics network. Highways are being told not to set up any kind of COVID testing along the highway so the trucks can get through. And also, Shanghai has tasked 3,000 more people to help distribute food and supplies to city residents.
Still, many residents are struggling to get daily necessities, particularly the elderly and migrant workers. Meanwhile, containers are piling up at the port because of a shortage of trucks to clear imports.
So food delivery should improve in Shanghai after the government announced some lockdown easing measures using a 3-tier system, and based on a number of cases over the last 7-14 days, you're either going to be remaining in lockdown or the least restrictive, you're in a precautionary area where there have not been any cases the last 14 days, and then you're free to go.
The central bank says inflation could breach their 2 to 4% target in the second half due to the surge in global oil prices. The BSP Governor Ben Jokno says inflation is projected to decelerate back within the target by the first quarter of next year. Recall that headline inflation quickened to 4% in March from 3% in February, matching the upper end of the BSP target. The central bank has also raised its inflation forecast for 2022 to 4.3%, taking into account higher oil and commodity prices. The government has raised 70 billion yen, or about $559 million, from an offering of 4-tranche samurai bonds. Fixed income news provider IFR said a 5-year tranche raised 52 billion yen, while a 7-year portion raised 5 billion yen. Meanwhile, an offer of 10-year bonds raised 7 billion yen, and finally, a 20-year tranche raised 6 billion yen. This from the Philippine Star. The Energy Department and the World Bank will launch an offshore wind roadmap this month. The Philippines' first offshore wind roadmap aims to tap the country's 178 gigawatt offshore wind potential and support the goal to move away from coal. Based on initial findings of the roadmap, the country could develop 3 to 20 gigawatts of offshore wind projects by 2040. Energy Secretary Alfonso Cusi says the World Bank support would help the Philippines achieve a 35% renewable share of wind energy in the country's total energy mix. And in other news, Tropical Cyclone Agaton has weakened into a low-pressure area last night, but the number of casualties has increased to 43. That's on top of 8 total injuries and 7 people still missing. The latest NDRRMC report also noted that over 213,000 families were affected by the recent weather disturbance. That's equivalent to more than 580,000 persons in 924 barangays. Cost of damage to houses rose to over 709,000 pesos. Cost of damage to agriculture, meanwhile, went up to almost 51.4 million pesos, while cost of damage to infrastructure is at 250,000. And that's a first look into the business day this Wednesday, April 13, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for your free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos. Mask on, wash hands, and stay safe, Philippines. Have a meaningful Holy Week. We are One News.